This is arguably one of the most important times to either be trading the markets or learning how to trade. I mean, look at what's in front of you. I'm going to show you in a second how simple it is on the charts. I promise you this, in 5 years from now, you'll look back and you would have wished that you got your head down. This is exactly what happened to me in 2008. I wish I had the experience that I have now back then, because I remember thinking one day there's going to be another opportunity like this that I'll be able to take advantage of it. I'll actually know how to read the market. You've often heard the term be greedy when others are fearful and fearful when others are greedy. Where are people right now? Do you think they're greedy or they're fearful? They're in extreme fear because they do not know how to recognize an opportunity that is crystal clear. So let's get into that now. I want you to capitalize on this and you'll look back and realize the psychological impacts of understanding where the masses are, where people lose and where people win. So let's dive into the charts. So let's take a look at the charts. Look at what is in front of you. Remember guys, you do not get rich quick, but you can make money fast. What do I mean by that? If you know and have the skill set, you can extract a lot out of one run. And I've got 3 on here: DXY, Euro, Dollar, S&P. Pay attention to these for a very good reason. First up, DXY. We're on the monthly candle. This monthly hasn't finished yet, but I want to cast your eyes to previously. If you remember when we broke out and everybody was calling dollar bull run, right, out of ego, more likely than actually what the market was showing us, we broke out, we formed that kind of long-legged doji formation on the monthly before it just dropped off, as we saw. Now we're seeing something similar. We get the momentum there, which is all it's done is filled all of this volatility in this wick. It's broken above the high, gets people caught on the wrong side. Remember, it has to make you believe that it's really going to carry on going for things to shift. The same way, if you pay attention to the gap here, we've missed that gap to the low, we will likely fill that. So what would be the ideal scenario? The ideal scenario for you to pay attention and extract money out the market is this run. And we're going to look left in a second. It's something really important. But what we're going to do is we're going to take advantage of this run if we get it. If we see the sell-off, which looks like more likely than to go higher, the amount of opportunity, for those of you that are funded, you're trading your funded accounts, you want to scale up, you're going for assessment phases, whatever it is, trading investor capital, your personal capital, you can make, it's not about this one-hit trade. I think that's a ridiculous mindset, but you can make a lot in one run. So if you know how to recognize an impulsive wave, you can continuously scale in and extract profit out the market in a sensible way. So we're looking for that run to break the low and then start to return because of these clear clues. And the easiest way to explain it without really understanding how we do things, because they look simple, but there's a lot of knowledge that goes behind this and experience. So you see this gap in between, usually price will fill that. So the same way we didn't fill it there, you can see price has now filled that to return. And the same way we didn't break this low, price will likely come back to break the low before it goes. So in simple terms, that's what we're looking for. Knowing what cross pairs to look at to actually be able to make money from the market, of course, that takes filtering every single day to understand, right, these are the key opportunities. That's a whole other ball game, but I'm giving you a sense of direction as to what to look for. So just quickly, guys, if you're enjoying the content that we put out on the channel, make sure that you stay in the loop by commenting, subscribing to the channel, turn the notifications bell on so you're always in the loop of the content that we're pushing out on a regular basis. We appreciate the support, and make sure you utilize the resources that we put out. So check all the links in the description. They will help you out massively on your trading journey. Right, now back to the video. The market will send you a message if something's going to change. So where else would the market go? Well, the market is going to go towards this high, but the market doesn't just go there like that. What happens is that you get consolidation. So you would see consolidation break out like this, that would say, right, we would take that message from the market, we're clearly not selling off, and then we're looking long. And if we're looking long, what does that mean for pound dollar? What does that mean for euro dollar? And you have to understand these things, because then you could take advantage by using this as your indication. So let's look left. Remember 2008, I remember like it was yesterday. If I have the experience, once I'm in a position of knowledge and I've got capital, I'll be able to take advantage of that. 2008 crash was within this squeeze, and then of course we recovered. The thing is, and someone asked me this recently about what's your experience of learning for a financial crash? Why is it so valuable? And the simple thing that comes to my head is that it recovers quicker than you think. And that's what you've got to pay attention to. When something crashes, it recovers. You've got to understand the psychology. Fear was happening here, right? I'm sure you'd all agree. Fear was happening here. Why? Because they think recession, 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 and then we recover. Now, it's the first part that recovers. Now, I'm not talking about this consolidation, which we anticipated this sell-off as well. For those of you that have been in Falcon for a while, you just go back and see. It's the first part of from here to here is fear to stabilization, because we're back trading at a decent area where there's not so much panic in the market. And that is what you have to understand. Just look at where the masses are getting consistently caught on the wrong side of the market, and then you just want to be on the opposite side. You want to follow the money. You want to follow the institutions, the funds. And I don't mean precisely to the pip to have to know exactly how they trade, but you just want to be on the side of the money. That's it. And that's what we follow. That's what our strategy entails. And if you look here, this squeeze, are we surprised that we broke out and squeezed from here? Not at all. This was asking to eventually break out. And then all we done is form an impulse up. We formed the bigger correction, consolidation. We broke above. We got people caught on the wrong side. We come back down. We got people caught on the wrong side again. And then we formed into this, range that we've got right now. So it's at a pivotal time to understand that if we stall and the DXY stays exactly like it is, if we get this kind of doji formation, you're asking for a sell-off to start. So we'll see how the monthly closes, right? We could break higher before we come lower. I wouldn't be surprised if the market is up here before it actually comes back down, because remember, it has to make you believe that something has changed to actually get you caught on the wrong side, get people buying the highs and selling the lows, which is what the amateurs do. Right, so if we go to the weekly chart, as you can see, we're stalling in that area. It's not enough just yet. It doesn't mean we're just going to instantly sell off, but we're at a point in time in which that can happen, and we're starting to see in that on dollar-related pairs as well. So that is the DXY. Pay attention to that. Euro dollar. This is what I'm going to show you. This is the real juice of these waves that I've been talking about. Forgetting the fact that euro dollar is in a phenomenal area for the buys, it does look like we might break the low a little bit more significantly before we actually go, but we'll see. If euro dollar was to rise from here, I wouldn't be shocked, and we'll take advantage of this run. We don't need to know exactly where something's going to happen. We just need to know where are the value areas. Even just that alone, I promise you this, if you've just started learning how to trade, this is one of the most important times, by the way, for you to learn how to trade. It's at a point where you're going to see a lot of volatility. It's going to test you. It's going to force you to grow. You're going to gain so much experience right now learning how to trade. UK is declaring a recession. What do you think is going to happen? The doom and gloom gets a little bit more potent. You see it more in the news. Remember, you're trading the markets and not the news. They're two different things. One is priced in. One is completely different. It's a completely different timeline. However, the doom and gloom, the fear, the property market starts to get devalued a little bit. Land starts to get cheaper. There's so many knock-on effects. And you've got to ask yourself, at what point are you going to take your life into your own hands? At what point are you going to develop a skill set in which no matter what happens, whether you lose your job, you're made redundant, you have a skill set to be able to print money? Not directly as such, but you'll be able to extract money from the markets, whether you're on your laptop, your phone, however. You can do this from anywhere in the world. Once you've put in the work and you put in the hours and you actually know how to trade, you can just continuously do that. Think about the freedom that you have right now. What's happening? Energy prices are going up. People worried about their bills, right? And they're going into a fear-based mindset. What's going to be the difference? The difference between amateur people and professional people and successful people, they can recognize an opportunity. So those that are in a fear-based mindset, what will they be doing right now? They'll be saving, worry about energy prices, worrying about petrol prices, fuel prices, which I understand it affects people in different ways. But someone else will not budget on investing, right? You don't budget on investing in yourself and investing in the market. So what I mean by that is that if you have to limit your buying new trainers and new clothes that you just probably don't need right now for the sake of it, or going to events that you don't need to do right now because your energy prices have gone up, well then you budget that. You don't budget investing in yourself. You don't budget learning a skill that's going to make you more money. A new t-shirt is not going to make you anything. And that's the reality of what society teaches us, that you feel good because you've got new clothes, or you feel good and you bury your head in the sand because maybe you're not happy in your job and you think, well, at least I've got this to look forward to. No, that is a loser mindset. You need to right now grab the bull by the horns, back yourself, grow a backbone, and realize that time is going to pass. And I promise you this, in 5 years from now, you'll look back and you would have wished that you got your head down. This is exactly what happened to me in 2008. For years and years, I'm speaking from experience, I sacrificed everything because I knew at a later stage I'll be finally free. Do you know what the best feeling is? It's not the McLarens, the Ferraris, the Lambos. The best feeling in the world is waking up knowing that whatever you want to do today, you can, with whoever you want, wherever you want. If you want to go to the other side of the world, you book a ticket and you go. That freedom is one of the best feelings in the world. I digress. I went off on a bit of a tangent there, but I'm very passionate about this because what it brings to your life. But let me show you, because there's something on Eurodollar coming. So if we just roll back to here, 2014, there is no coincidence. There's something hidden in here as well. So if you look at 2014, you don't get rich quick, but you make money fast. This is an example of that. Look at the top to the bottom. Look at this, where we are in 2014. This is where, in my personal humble opinion, that traders that didn't even know what they were doing were making money. And I saw this, making ridiculous profits, 200% in a year, 400% in a year, that didn't know what they were doing because the market just carried on selling off. So anyone that sold Eurodollar, they carried on selling it. And what did it do? Hit the 90% rule like clockwork and actually went on even further. That's just its first key target. But something happened before that. If you could recognize, by the way, this is one of the most simple structures you'll ever trade if you really understand, and all the intricate little entries all the way down. There's probably like 50, right? There's so many to scale in. It's not the one trade, it's all of the ones compiled and amalgamated into them. Now, if we look at that one, you might think that looks quite simple. I understand. What actually happened, all it was an impulse into a correction, which is a pullback, and then it impulsively moves back down. So this wave was expected, especially if you could understand the simplicity of the structures that made up the pattern as well. You'd realize why this one was so important. But there was one previously, right? So if we just look back, but it was more condensed. So if we look here, and if you know what you're looking for, you'll see it. If you don't, well, then you don't. So now, look at what's happened. Anything different? Can you see the similarities now? What do you see? Section 1, Section 2, Section 3. The makeup of them are different, right? You have to understand how to read the intricacies. But all that happened was an impulse, and we had a correction, and then we sold off. That was it, right? The only difference with this one to the right actually playing out for further and playing out longer was the fact that this particular pullback or correction, if you like, pulled back pretty much 90% of its first run, where this one is only going to pull back roughly about 50%, right? So when you understand that, imagine pulling an arrow back, right? A bow and arrow. When you pull that back, right, it needs a lot of volume in there to be able to move. This is why you're in 2 lower time frames. You're not going to get a big move by just a small time frame. That would just be, a day-to-day thing, right? But if you're going to look at a big trade like this, it has to pull back. And then the reason why that's important to you as a trader is that you start to see the market differently. You stop looking at, well, the market's been a bit slow, it's been a bit range bound as to what you see, or it's just been moving sideways. Good. If it's moving sideways from the right area, then that's a good thing. That's giving you another opportunity to let the market breathe, and then you go again. But again, if you don't know what you're looking for, you just see it as mess, you see it as choppy, and then you leave it alone. Then before you know it, you look back and think, wow, imagine I could take advantage of that. And I was the same. I was there as well. But I've done thousands of hours to understand how the market works. And right now, I am predicting that we're probably going to see a very similar type of volatility that we did in 2014. And if it's anything like this, or even half the volatility of that, then we are in for a treat. So there's 2 ways right now. We are either going to break this low, and the market will give us a very clear message here that we're either going to carry on to that low, which I'd happily sell that. The path of least resistance shows us this, that we're going to be moving to the upside. So I'm expecting a wave to be moving higher, to break that high and move in towards this area. The good news is, whether we buy or whether we sell, it doesn't matter. What matters now is you recognize that this is a high value area. You recognize that the DXY is in a high value area. And sometimes that's all you need to do. It's all the middle stuff is where you're getting sucked in and caught in. You're not looking at the macro picture. You're too zoomed in. You're over trading, not realizing that it's got nothing to do with that. Keep it simple. So now let's look at the S&P. Look at the S&P right now. This is so important for you to understand. If we look back, we have consistently repeated these patterns. Look at the sell-off here. The reason why these patterns exist is because they're consistently fooling people, right? So if we go weekly chart, you can actually see the same one that happened here in 2019 and 2020 is the same thing that's happening right now. And we're at such an important part. Even if you was just to look at this structure here and you just enlarge it from a scale point of view, that's just a smaller version of this, right? So this is a bigger degree and it's creating the same thing. So if we go to the daily chart and then you see this, why is expanding so important, right? Nice little tip. Is because when it breaks above, it really convinces you that it's going to carry on going higher, right? So it catches people on the wrong side here, and it does the same on the lows, and it creates this expanding formation and pattern that consistently repeats. It then breaks above, forms continuation, and then carries on going. So not shocked at all as to why we're here. So the point that you've got to look at with the S&P is that, are we doing the same thing? Have we coincidentally expanded again? 1, 2, 3, we're in the area. We are at a pivotal point. If we see a long drawn out consolidation, very similar to this in the inverse, if we see that there, then we potentially could be going a lot lower, which is a completely different amount of fear that we will see in the markets. What is more likely? What's more likely right now is that this structure is doing exactly the same thing, and eventually we might stall around here for a bit and then we break above, and then we'll see, for example, on the monthly chart, more of a wick and then a push up here, and then all is well in the world again, and then the fear isn't there. So remember, these things, they can recover very, very quickly. The same way here, if you remember, look at the amount of fear that was happening in this, and then guess what? We moved up and we recovered even further. So the same type of thing. The reality is, your job as a trader is not to predict the market. I think those that are trying to predict the market have got their ego so far involved. And guess what? Who cares if you call it, right? It's ego. The reality is, all you should be asking yourself is that if this happens, I do this. But if this happens, I'm going to do this. Your job as a trader is not to have a massive ego. Your job is to make money. So surely all you should really care about is if this happens, this is a market telling me this is going to happen, and then I'm going to act accordingly. That is it, and that is all that we do. You can have a bias to some degree because part of you needs one. You can't be so neutral that you have no idea, right? You're going to have an indication. The DXY, essentially, I have a bias that we're going to sell off, a stronger bias to sell versus to buy. But it doesn't mean I'll be blindsided and then won't take a message from the market if it presents. That's the difference. So right now, yes, I do believe it's the best time to learn how to trade. For those of you that have been thinking for a while, you're either sitting there on the sidelines, spectating, and you're going to watch me, and I've experienced this, right? With people that I grew up, people that I knew, I've watched people take action and they're funded right now. They're doing very, very well. And they're in such a good position, and other people that procrastinated about it, they weren't too sure. They was like, oh, I'm not too sure. I'll see how this goes. 5 years has passed and have not done anything. Yet I've watched people that have taken action and are in a completely different position. So you can either wait and watch other people take action and get further along than you, have more control in their life, have more freedom and discipline in their life, or you can finally build a skill that gives you options. If you're into fitness, great. If you're into photography, great. If you're into videography, perfect. If you like to explore and travel, if you like businesses, amazing. If you want into property and you want to build a portfolio, it suits you. Right? But you don't have these options and these choices at the moment because you've not built the wealth yet. But what this does is a vehicle and a tool and a skill set that you've got forever to be able to consistently build. And then you can use that money to actually funnel into other business ideas that you're truly, truly passionate about, that you would do all day, every day. Now, I'm obsessed with the charts because I have been for years. That is a blessing and it's an advantage. However, you don't need to be sitting here all day, every day glued to the charts. Right, because I'm not. I probably spend maybe 30% more time than what I really need to, just because I love it. I don't actually need to, but I enjoy it. Right, so that's my passion, and then I'm able to help others. So recently, I've been working on for a year and a half. I've been testing, refining the evolution of the Falcon strategy, and I found a tweak, a refinement that basically keeps our risk the same, but just adds so much more profit to the market. I've got students testing out already. The numbers are ridiculous, genuinely humbled, and they are phenomenal. So it's so good to see. And just by adding this in, the difference of keeping risk the same. And what I love about this is that when the market's going to shift, we've got the bigger picture in mind. So we're still able to take advantage of, right, this is the macro picture. But our ability to scale into the market safely and keep our risk the same is genuinely insane and still blows my mind. But again, we're going to see over these next coming years, there is so much to take advantage of the market, and I want to make sure as many of you capitalize as possible. And I want to leave you with one last thing for you to think about. The traders that are going to capitalize on these runs, right, and make a lot of profit, make a lot of money, and be able to look back and recognize what was there, are not going to be the ones that are the most intelligent. It's not going to be the ones that have the most knowledge about the market or the smartest people. It's going to be the ones that are process and rule driven, that can understand how to follow rules. That is it. Someone that can follow their processes and they've got a great morning routine, great evening routine. They've got an edge. They've got a system. They understand it. They have a black and white trading plan. It's crystal clear. It's as systematic as possible. It's going to be those ones. Now, the good news is that any single one of you can obtain that with the right work ethic and right discipline and right processes. So one of the most important things right now is not to gather more knowledge about the market or more time frames or more indicators. It's to make sure fundamentally, have you got a good process that leads to the execution of you trading the markets? If you have that, I promise you, you'll make more money in a shorter period of time than ever before.